broadcast is now starting. All attendees are in listen-only mode.
Okay. Welcome, members and guests, to the Virtual Investment Club of Sacramento. We are a better investing model club open to the public. All of our meetings and stock studies are virtual, allowing us to have members from around the world and the U.S., including Canada and China. Guests, you'll be muted during the meeting as observers and will have an opportunity for questions. This is our disclaimer for our meeting today. The stocks presented today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company's investment decision. The views expressed are those of members and do not necessarily represent those of BetterInvesting. This meeting may use products or services not endorsed by BetterInvesting. The club is not endorsing or promoting these websites, products, or services. So now I will turn it over to Hanny, who will be giving us the Treasurer's Report and an iClub overview.
Okay, thank you, Joanne. Would you mind making me a presenter?
Yes.
Or can I do that myself?
You can do it yourself. Let me do it anyway. Yeah, you're an organizer. You can do it yourself. But I did it anyway.
Okay.
You should get a.
Can you see my screen?
Yes.
Okay.
Yes.
And is the meeting being recorded? Because I got a message saying that it wasn't. I don't know why, but.
Yes,
okay.
It is recorded.
Okay. All right, thank you. And I'll start off with our buys and sells. And last month we voted to buy two stocks, PetMeds, and we bought 44 shares. We typically buy $1,000, so we bought 44 shares. At the time, the shares were trading at $22.52, and we also bought National Beverage, ticker symbol Fizz, 19 shares at $52. And I think PetMeds, subsequently, the share price went down significantly because of a competitor. This is a graphic of our club portfolio. It's a heat map that's generated by iClub. The squares represent the holdings, and the size of the square represents the size of the holding. The color represents the performance of the particular stock. I put two heat maps side by side because one is from the one on the left is last month, and the one on the right is this month's after we made the two purchases. You can see that last month we had a lot of cash. It's gone down a little bit because of the two purchases that we made. You can also see that we have a few green stocks. Those are ones that are performing well: Disney, Fleet Core 5, Entergy, Lam Research, Comcast, and Heiko. The rest are sort of a different states of performance. Ozark is red, I think, because for a couple of reasons, but they changed their name or their ticker symbol from OZRK to OZK, and I think that's causing some difficulties with iClub. I don't think they've made that change yet, and you'll see a little bit later on might show up in some of the charts. This is our gain-loss report, and it shows how each stock is doing so far since purchase. In the first column, you can see the date purchased, the number of shares, the cost per share, and then the market value, the gain-loss both in dollars and in percent. And what I'd like to point out here is that we have a few holdings that are doing quite well. So Comcast at 34%, Disney, Entergy, Facebook has done, Five Below rather has done very well. FleetCor, Heiko, Lam Research, IPG. So these are all doing very well. The rest are, like I said, different levels of performance. Some have actually gone down, but overall we're doing. We've grown the portfolio at about 20%, which is pretty good. What I did next this month is just compare to various benchmarks, and the first benchmark that I used was a bond ETF, AGG, and the green is the S&P 500, and you can see that for this year we are up about 30%, 31% versus the S&P at 12.8 roughly, and the bond index iShares core bond ETF is up about 11, and then lifetime, we're pretty much tied with the S&P 500. So I think we have a bit of work to do. We can improve a little bit to make sure that we get our objective is typically about 5% above the market. So we have a little bit of work to do, but so far this year we're doing well. And since inception, since the club was started, we're doing slightly better than the S&P, and obviously much better than bonds. This one is emerging markets, and they've been experiencing a lot of challenges recently throughout the last couple of years, and you can see again in emerging market ETF, EEM is in yellow, and so we've done significantly better than if we had put some of our money in emerging markets. Performance relative to S&P is obviously the same. These reports are coming from my iClub, and you can change you can compare to two benchmarks, the S&P and something else, but you have to compare to the S&P. There is no option, and so it's always there's a third option, and that's what I've done tonight. This is small caps. Again, small caps have not been doing well recently, and even over the long term, they have done not very well compared to S&P. So again, our selection of stocks has been outperforming the iShares IGR, which is I think the Russell 2000, a basket of stocks from Russell 2000. And then finally, large cap. So large cap growth has been doing well, and but again, we've outperformed this year, not so much lifetime. You can see here that since 2016, we haven't kept pace with the large cap IVW index fund. And this is another interesting report. This helps us to identify the kind of decisions that we make. Do we make good decisions or not? And what I've taken this report and I've modified it. This is the output from my iClub, but I'll show you the next slide is a little bit different. Basically, what this tells you is, again, when we purchased a particular stock, what our cost was when we sold it, and how did we do when we sold it, and then how has it done since we've sold it. So should we have should we have sold it, or should we have kept it, or how did it do after? And this hindsight is 2020, but it gives us a little bit of insight into our decision making. So here's my sort of modified report, and what I've done here is, again, these are, and I apologize that I ran sort of two different reports, so there's a couple of stocks here that are missing from, this is the iClub screen, and I had to run it again But these are all the ones that we've sold so far. So CVS, High Crush, LKQ, Middleby, Realty Income, and Tencent. And you could see here that for 3 or 4 of them, we've actually, when we sold them, we lost some money. But let's take CVS for example, and we sold it was $70, and currently it's sitting at 52. So if you look at that difference between -10 loss that we have and -33 loss right now, if we had held on to it, so we've actually are 23% better off having sold CVS. High Crush is the really significant one. We bought it at 8, sold it at 14, made 61%. It's currently trading at $2.32. If we had kept it, and it would have gone from 8 when we purchased to $2.32. So that's a swing of 135% to the negative. So the only 2 that we maybe should have hung on to were Middleby and Realty Income, which is a real estate investment trust. So just some comments, and so four comments. I think we're doing well, but we need to do better. If we want to sort of maintain the performance relative to the market or better than the market, then we need to be a little bit more careful in how we pick stocks going forward. And just in keeping with the Game of Thrones theme, winter is coming. There's a lot of talk about the market going down, and I think we need to maybe think about taking a more defensive stance. Some recommendations for this month is review the portfolio, consider some more defensive holdings. We have a number of stocks that are less than 3%, and if I go back, sorry, let me just jump back here. Yeah, I don't have it on here, but if you look at the percentage of some of these, they make up about 2%, less than 3% of the portfolio. So what if they move up or down, they're not going to impact performance very much. So if we're buying, I think we should add to those those smaller positions and get them up to about 5% so that they can make an impact. The other thing is, I think we should develop a watch list, and sorting and keeping track of the sector and industry, offensive and defensive, and size. Those are things that we typically look at. So any questions so far? No? Okay.
I have a question. I think a nice report you just made, Amy.
Thank you, Bernard.
Yeah, it's very interesting, and too. Thank you.
Thank you. Okay, so I just wanted to take a few minutes really quickly and just show you iClub and give you an idea of some of the features, because we're not using it very much, and so I think it might be worthwhile for people to look into it. We all have access to it through the club. This is our homepage. This is live now, so I have it set up here, and so this is our club home. And each month, as we input buys and sells, this heat map will change. And so this is just a dashboard. A dashboard screen. You can, right here, there's some recent blogs and commentary on the market. This one, my iClub top 40 is interesting because it shows you what other clubs are buying. And I think there's, if you look down here, Investment Club Top 40, if I click on that, it shows the top stocks either by dollar amount or by just number of clubs buying, so you can see what others are doing and what's some of the sells and some of the holds. So that's always interesting to look at. This is the accounting I'll skip because that's more for the treasurer. It's you shouldn't have more than one person actually making changes to the portfolio, but the reports, anyone can go in and you can run, say for all of these, you know, they have different reports that you can do on a monthly basis. So let's look at just this one. This is what I was referring to before. So this is the percentage on the right here that of each holding that we have. And you can see like PetMed and Fizz, they're about 2%. Bank of the Ozarks is 3%. Pacific Bancorp is again 2%. So we have quite a number that are like 2%. And so when they, you know, if they move up or down, they don't really make an impact on the overall portfolio. So if we made some good decisions and bought those, we're not going to see a huge change in portfolio performance, and that's why I think we should aim for about a 5% for each holding. So there's a number of reports here. The other one is Stock Watcher assignments. So I've tried to input most of the Stock Watchers, and so they're all here, I think. We can check if this is correct later on. But the other one is you can actually run a Stock Watcher report. And so if I do Air Lease, for example, it'll give me the latest SSG and some commentary. Now this is canned, so it uses mostly the same words over and over again, but it kind of it's useful because it tells you the kinds of things that you should look for when you're reporting on these companies. So you can take some of the information here and put it in our format. I find this kind of useful actually. So number of you know, reports you can, and graphs. You can let's do performance. It'll give us different graphs, and you can change the time period, things like that. So I encourage you to kind of try this out and see how look at the different reports that you can get. This is a watch list, and these are just some that I put in, and it'll keep again track of the prices, and if you do an SSG, it'll do, you know, the buy sell ranges and so on. Taxes I won't go into because we don't use real money. People, so we have everyone in the club here. Jane, Mina, I think Andrew's signed up. Yes, Andrew's signed up. Jane, Chen, and Mina are still haven't logged on. So when we come to when we come to do voting, so this is this was just a motion that Roy and I did to just to try out the voting feature, and it gives you the results here. So you can do you can see the detailed results, who said yes and no, who abstained, and you can add a new motion. So if we want to buy a stock later on today, for example, or sell one, we can just do that, and emails will automatically go out. So it's pretty handy. Then you have message boards. If you want to have a discussion about something, there's the message boards, and then file storage. We can upload some of our files here if we wanted to. We use Google Drive mostly, but this is another option. And then finally, there's a kind of an interesting calendar here. So I've put in our meetings, third Monday of each month, so you can check out the meetings. You could also click on portfolio, and it'll show you things like the dividend date for various stocks in our portfolio. You could change the month, So let's go to July, for example. Yeah. So here's our meeting again, the third Monday in July. And then you can do global. So if I go back here, we're in May, Better Investing National Convention shows up, any other sort of iClub Central investment webinar, things like that will show up. So it's pretty handy. You can export this, you can add new events and so on and so forth for the club. So it's very easy to use, very handy, and I encourage you to sort of play with it and see how you like it. So, and that's it.
I have two
So,
questions, Henny. For the
yes.
calendar, will the earnings release calendar will be show up in this calendar as well, or no?
That's a good question. I am not sure. I think so, but I'm not sure, Jay. I haven't let's see.
Because you
So
showed
far.
the dividends payment, so it means that they
Yeah,
know what stocks do we have, right?
right.
Wondering if it will show maybe.
I
Okay.
don't think so because those are set by the companies and they change sometimes, and so I'm not sure if they are included. But we could certainly, if for each of us that are following certain stocks, we could certainly, if we know the earnings, we can put them in here.
Hmm.
But I don't. It doesn't look like they. Let me just check March, see if there's anything. Yeah, they're mostly just the
Just show
dividend
dividend.
dates.
Yeah. Okay.
Yeah.
Yeah, but hi everyone.
Hi,
Can
Roy.
you
Hey,
hear me?
Roy.
Hi.
Yes.
I'm in Chicago, and I'm not sure about the Wi-Fi, but let me just comment on two things. As far as the date of the earnings release, they usually notify the public 1 to 2 weeks ahead of time. So I'm not sure that that's really enough time for iClub to gather that and put it in. You would think it'd be easy, and I'll raise that with Doug later. The other thing is, could you go back to May?
That's Doug. Doug Gerlich?
Yeah,
Yes.
Oh,
yeah, and you'll see Tuesday. Haney mentioned the webinar, and this one, Doug does 3 a month, one for toolkit users, one for this club meeting, and he has good information for clubs. So I urge everyone to maybe sign up and tune in Tuesday night, tomorrow night.
How do we sign up?
Go to iClub and .com, and then you can find it on the website, a way to sign up for the meeting. Once you've signed up, I think you're always notified ahead of time, and then you can click on the email.
Is this
So anyway, I
is it like a
just urge everyone
is that like
to
an
do.
investment club meeting, like a wait, like an hour?
No, it's not like our meeting. It's stuff that's important for clubs. Like January, February, he talked about taxes
Oh, okay.
and the tax printer. And then other times there's something, he's done a couple with that, the new regulations and how you want to situate your club, with no trusts and stuff like that. So it's all useful for club management, basically.
Oh, gotcha. Thank you, Roy. Henny, I have another question about the heat map. So the color indicates what? Maybe you mentioned that I missed that part. I know the SSG, the color indicates, the healthness, how many people have studied the company, or indicate the healthiness of the company. So in iClub, what does that? Okay, heat map, size, color. What did they say? The size. Size represents percentage each for, okay, percentage position, and the color indicates what?
Green is good, red is bad. And there's a graph below there, below this thing, like right there. Yeah.
Oh, okay, okay, gotcha. Okay, that makes sense. I see.
Hey, correct me if I'm wrong, but it seems to me that the heat map on the SSG is what the SSGs are done by like the last 99 club members, whereas what's in the iClub or my iClub is actual result of how well the company has gone up in price or down in prices. Is that correct?
It's based on our holdings, seems like.
Right, but
Right.
how we've done.
Mm,
The other one is only a summary of projections.
right, right. I think
Where I
so.
think iClub is actual result. I think.
Yeah. I kind of agree with you, Roy, because you know how we lost Ozark about 30-some%, Skyworks 15%. So Skyworks is about like light orange, like, yeah, if I remember correctly, what Henny projected early. I think you are right.
Annie, I have a question regarding what you said earlier in your presentation on my iClub about Bank OZK, how their ticker changed and how that might not have translated in iClub yet, my iClub yet.
Oh, okay. Yeah, OZK, it still shows OZRK. Henny, you're muted. Just to let you know.
Oh, sorry. Okay, I was talking to myself. Um, yeah, when I run certain reports, let me go to reports here really quickly. Let's try this. No, that's not it. Actually, it's in graphs. Okay, yeah, here. Where is it? Sorry, just give me 1 second. Sector. There's a couple where, yeah, right here. You see where it says unknown, 3.4%. That's Ozark, and so I think it's a bank, so it should show up with banking. It should show up with Pacific Pacific West or whatever it's called. So I think it's see here PW whatever PACW. It shows as a regional bank, but here Ozark says unknown, and I think that's because of the ticker. So they should change it to OZK, and I think then these reports will make more sense. But that's the only one that I saw that was a little bit unusual.
So do you know if the data is still tracking? It's just that this is
Yeah,
weird.
it's just I think it's just the ticker symbol, but the data is okay.
Okay, thanks.
Maybe Roy can report that to Doug.
Yeah, I can.
I'll take a look at it.
In
Yeah.
In the interest of getting through our stock reports, can we move on?
Yes.
Absolutely.
Okay. All right. Next, we have our quarterly reports, and we'll start off with Tom since he has to leave in a little bit. Tom, I will make you the presenter.
Oh, okay, can you hear me?
Yes.
Can you see my screen?
Not yet.
Is it big enough?
Yes, we can
Here
see
you
the
go.
screen. Go ahead.
Okay, I'll start off with Biogen. It's a biotech company. It has not performed that well. We bought it on the thesis or on the idea that they had a promising Alzheimer's drug. And
Hey, Tom, can I pause you for a second? Can you speak a
What?
little bit louder?
Okay, we bought it with the idea that they had a promising Alzheimer's drug, and they discontinued the clinical trials in March because it failed the trials. So it doesn't, didn't meet our thesis or one of our reasons for buying. The earnings have been, the earnings have been okay, but that's based on, their multiple sclerosis drugs and their another drug called Spinraza. But going forward, they're going to need to come up with some new products in order to grow the earnings. And the Alzheimer's drugs, the MS drugs are facing competition and patent challenges possibly in the future. And there's Spinraza, there's spinal muscle atrophy drug that's also facing some competition. And there's a new drug is supposed to be released, or the approval is expected this month, but it's got a whopper of a price. It's pure, but it's a $2 million price tag, if you can believe that. Hope you're all sitting down. I'm recommending that we challenge, like next meeting, we challenge this stock, try to find something that has better potential. They have their pipeline is not rated too high. They might make some acquisitions. So you just never know. They're selling at a low PE. The stock selection guide shows that a buy by pretty conservative analysis because the price has gone down so much. But I don't have much faith for this company in the future. So
this is far out, but there is they find that cannabis is attacks the plaque that is part of Alzheimer's disease. Certain strains of cannabis have probably done better than Biogen in this regard.
Well, I don't know about that. I would have to see some clinical studies to prove that to me. I'm a skeptic.
Well, there are coming studies. For years you couldn't study it, but now you can.
So what's your recommendation, Tom?
I'm recommending that we
challenge it. Okay.
we challenge it.
Yeah.
Sorry,
Henny. Go ahead.
I was just.
Well, we could sell it. I'm recommending we challenge it. So we have, and maybe with something in, medically related, so that we maintain, our sector allocation. We could sell it. I don't think it's at great peril of going down. But you never know.
If we are going to challenge it, if I could suggest that we do look at a cannabis stock, I think that sector is, it's done very well. There's been a pullback. I think once the U.S. market starts to increase and more states approve cannabis as for medical reasons, I think you'll see some pretty significant growth in some of these companies. So that might be something we want to take a look at.
Are there American cannabis companies, or are they primarily Canadian?
I don't know. I think there's a few American ones. Canopy Growth here has been making acquisitions in the U.S., and I think a couple of the big ones are going to be traded on both Canadian, the TSX and American exchanges. So once that happens, we might want to look at those ones.
I also have a recommendation. I learned this company at the bank. It's in healthcare sector, but it's not in the same industry. Tom, it's not pharmaceutical. It's a medical instruments and supplies. The ticker is LMAT. La Matrix Vascular.
Oh, yeah. I've heard of that.
Yeah. So I looked at their earnings as a double digit, like at 26%, but the sales is last 10 years about 9%. It's a small company and small. I would like to, whoever's doing stock study for next month, I think Tom is you and Joanne, you guys may want to take a look at this company. La
Okay.
Matrix Vascular, LMAT.
Okay. Yeah, I've heard of it.
Yeah.
Tom, I have a
Another
question.
medical stock.
Tom, I have a question about your SSG.
Yes.
And maybe you discussed it and I missed it. Go back to the first page. Even with your low numbers, I see that it's 6.7 to 1, which looks like a buy. I didn't see what the total return would be, but you have a 15% average growth rate for sales and 25 for PE, but you put in 3% and 4.1%. Why so low? Is it strictly you don't have faith in their pipeline?
I don't have faith in them, and I was looking at the analyst projections, and their main drugs now are the MS drugs, and those are facing challenges. That market is not growing. And then there's their growth drug, the Spinraza, is probably going to be facing competition. But I looked, here are the over on the right hand side, the analyst estimates are just all over the place. So I didn't really know what to make of it. You can see, Morningstar 0.6, Value Line 5.5 as far as sales growth, and then earnings growth go everywhere from 1% to 12%. So there doesn't seem to be a consensus, the one that comes over here on BetterInvesting, two-year sales estimate is 0.1%. EPS long term is 0.6%, is what the BetterInvesting data is showing us. So to me it's a shot in the dark, but I don't. That's the best I could come up with.
It sounds, Tom, I tend to agree. It sounds like if you look at Gilead, which was kind of a darling of, investment clubs in the market and so on, and then the stock has been going sideways for quite some time. So I think a lot of these pharmaceuticals, if they don't have something promising in their pipeline, they tend to languish for a while, and it just doesn't go up. So I think this will happen until they make some sort of acquisition or have some new discovery.
What's our return, Henny, on the stock? Do you remember roughly?
Yeah, I can look it up. 1 second. It's
Biogen. Oh, we are losing. No, we lost 7%.
minus 7.6%.
Yeah. Wow. Okay.
So
We had the stock since the beginning of 2016, having 3 years. That was our first stock to purchase, I think, for this club.
Yeah, it did very well, and then one thing that we don't do is we don't set price targets, and so I think there's a philosophical discussion that needs to happen at some point. But there's one group will tell you buy and hold forever, and then others will say set a price target. When you reach that and you make a certain return, sell and look for something else. So I think the stock did go up, and we had a nice return on it, and then recently with this bad news it's gone down. So there may be some merit to setting target prices and then selling when you reach, when you get a certain return.
Well, but quarterly we do review every quarter, and if it's in the sell range, we could sell. You know, as far as this medical stuff, another one that I think is good is Stryker, because even if there's no inventions of new pills or anything, we're still going to need more beds.
Yeah, Stryker is more
population's
equipment.
age.
Yeah. Stryker
Yeah.
is more equipment, I think.
Equipment, instruments. Yeah, see, I'm displaying a 2-year chart here, and you can see in March the stock price went down dramatically. But it's sort of up and down until then.
Can we move along? I'm trying to get everybody's stock report and
Okay.
quarterly report in,
Yeah.
and so we should try to keep it to 5 minutes.
Okay.
That'd be great.
So yeah, the conclusion is challenging, not really sell. Like challenge the stock. Where you can sell.
Well, I'm okay with either one, but I don't think we're at great danger of loss at this point. It has fallen so much. I think the existing products will support the current price.
Okay. All right. Join.
Okay. See, next up we have, oh wait, it's Tom still. Lamb.
Okay, so let's see here. So Lamb is a, shoot, let me move this over here. That one, I guess.
On your second tab. Okay, there you go. On your
So
second tab.
Lam is a semiconductor equipment manufacturing company. They're in a cyclical industry. The price has gone up recently, but the quarterly data just looks awful. If you look at the trailing 4 quarters, you can see the sales, pre-tax profit, and earnings per share are all down because there's less demand for equipment in the industry. Like last year, the industry, they figured the market was $50 billion for the equipment. This year, they figured the market size will be $40 billion or a little bit more. So there's just less sales opportunities this year than last year. Last year, the company supposedly upgraded their equipment, and this year they're not doing it. But this is, I don't know, it's a little hard for me to understand. You know, the stock has gone up, even in the face of all, you know, the industry downturn. And I guess the market is looking forward to their thinking, you know, next year things are going to be better. But this doesn't, the stock doesn't quite track with our NAIC principles about, you know, price following sales and earnings.
Is this
Price for
probably
earnings.
disrupted because of the fear of China trade war, right?
Well,
is that what's affecting this now at this time?
This stock is up. You know, a lot of the other ones are down. But let me show you a price chart here. Over the last 6 months, it's held up pretty well. Now, maybe the China thing down a little bit since the 1st of May, but it's up a lot from the market bottom of Christmas Eve, and so I don't know. I'm recommending a hold at this point. Here you can see there's the figures for quarterly.
That's
sales.
ugly.
But it's up. It was, I guess we bought it on 11.19. I think that's about right for 143.74, and it's just around 184 today.
Okay.
Yeah, we bought it at 144, and the current price is 194. So we're up 35% roughly.
I don't. Well, I think your data's a little old. Mine is 184.
Okay.
Hmm. Okay. So your real recommendation is a hold?
Yeah, yes.
Okay.
But
Okay, Joy.
there's going to be, it's selling for, I think let's see, the average PE ratio has been 15.6, PE is 12.1. So, I think it has room for PE expansion. And I think the market, I think things will improve eventually. But I don't know. These are, to me, it's kind of confusing because of the way that stock price doesn't seem to be following the earnings.
I have a question. Does this company has any business that has any correlation to Skyworks? Because they're both semiconductor company, right?
Yes. Well, they sell equipment. Most
Equipment
of
to
their
make chips?
Don't they make stuff for medical, for pharmaceutical companies to?
no, it's
right?
equipment to make chips. The majority of their business is memory chips. So their biggest customers is Micron, Samsung, and SK something or other. These big Korean companies. They have Intel's a fairly big customer. They do sell some other equipment. Skyworks is probably one of the smaller customers. I'm not sure exactly, but the ones that I mentioned are the largest customers.
Okay. Another thing is probably I would like to hear next company is Jane's company that followed also the semiconductor company, just to see if it's the same thing, like the earnings didn't do well, but the stock price, is going up in that industry. I'm just curious if they have any correlation in that industry.
Okay, can we move on?
Yes. Can we listen to the other company first, the James company, so we can have some sort of a comparison? Because these two companies are competitors based on the stock study, the stock presentation that Henny and Jane presented.
What companies?
I don't remember the name, Jane. What was the name? ENTG or something?
Yeah, it's intricate.
Intricate.
Oh.
It's actually intricate. But it's actually not in the same sector, but it's not exactly comparable because ENTG is making some solution for them to use in manufacturing semiconductor chips. So it's not selling equipment. It's solution. So it's not exactly comparable, but we can go over it.
Okay, so I'll make you a presenter.
Okay.
They sell chemicals that are used in the semiconductor process.
That's right. They sell solutions.
Sell solution? You mean sell?
The chemical, the solution,
okay.
chemical.
Okay.
Okay. All right. So can you see my screen now?
Yes. I can. Mm-hmm.
Okay. Yeah. So it's integrals I'm presenting now, and as you can see, this quarter, their revenue has the growth in revenue has decreased to 6% about, and it has been in the double digit, but now it's in single digit. So for that, I have changed my SSG projection growth in revenue to 6%. and earning has taken a hit because of the revenue has not been increasing as in the same rate as before, and also expenses have been, constantly increased. So it has been the earning per share growth I projected to be 0.2%. So this is my SSG. I can show you.
Oh, okay, Jane. There's a guest to make a comment. Can you make your screen as a full-size screen? Maximize.
Oh, full size.
Yeah. So right now
Okay.
you have a 74. Maybe you make 150 or so. Yeah, bigger.
Yeah. Okay. Will that be big enough?
Yes.
Okay. All right. Let me show you the SSG. Okay, so because of the revenue growth, the earnings per share growth have not been as good as before. So I have reduced the SSG based on the current projection. So I use 6% as the revenue growth rate, and I also increase the earning per share growth rate to 0.2%. That's actually not, I pick up the ratio. I just use the preferred procedure to come up with that ratio. So I look at the prior years to determine the profit margin ratio. So I would say it's 14%. It's not as low as 9.5%. That's the default. But then I just pick up 14% for the profit margin ratio. And I look at the tax, and I think it's 10% rather than 5.4. That's last year, because as you can see, current year, it's more than 14%. So I just use 10%. So with the preferred procedure, then I come up with 0.2%, and which is quite in line with the reality. And so with that, you can see the most recent ratio for the quarter is the sales growth rate is 6.5%, even though in the trailing 12-month period is 13.1. So you can see constantly it's decreasing, either in revenue growth or in earning per share growth. So and then you also look at current price, just as LMX, it's in the same sector. For some reason, the price has been holding up very well, and for now, we purchased it in October last year, at the same time as the other stock, and we put in 1,000, so we got 38 shares at $26, and now it's trading at around, I think last night it decreased, but then it's about, when I did the study, it was $37. So as of today, we are making a profit of $391 over $1,000 over 7 months. And then if you look at this SSG based on the projection ratio we are looking at, and so the price for today actually fall into the sell zone, and because the projected average return is actually in the negative. And then as this quarter, there's a new development. The company is merging with another company called Versum, VSN. And because of the merger, there will be a lot of uncertainty. So I would recommend sell. To take a profit and annualize, if we annualize the return, it's actually 67%, which is a quite handsome return we are getting. So I will recommend to sell based on the the SSG I did, and based on the uncertainty we will be facing in terms of the merger. Any other question? Any question you have?
This company's done very well. You're intending to sell, you say? I understand for sure.
It's doing well, but it's as you can see, the revenue growth and the earnings per share trade is trending down significantly, and they are merging with a company which is as big as itself, and there will be a lot of uncertainties. And I think with I mean, I agree with Haney that we need, for some stuff, I'm not saying for all the stuff, for some stocks we may just take profit at a certain target price, and now the price at $36, $37 is quite a handsome price, and I would recommend to sell because of the projection, growth rate I'm looking at right now. Based on SSG, is also in the sell zone.
Okay.
So if you have any question, we can look at it. And I look at the projection in both revenue and earnings per share, and also look at the liability in relation to the capital is increasing, and all this I just think, of course, they have to increase the liability because they have a lot of expenses in relation to acquisition. They acquire a company just beginning of the year, digital specialty chemicals, and they also talking of merging with a company, acquire a big company called VSN, Versum. So with all these, I think we should just take a profit and sell it. Or we can challenge it.
Okay.
Yeah.
Thank you. Jane, do you want to go ahead and do your faith? I'm sorry. I mean, can we hold some of our questions till later so that we can get, I mean, unless you don't want to do all the quarterly reports.
Can we hear Skyworks? Because I want all the semiconductor presented at the same time. I want to see if there's any correlations.
Well, okay, I understand that, but let's finish the annual and let Megumi present, and then we'll go on to the other. I don't think we'll forget what we've heard so far.
What's annual? Which
I don't
one's
think
that?
Megumi doesn't have a report this month. I don't think. Does Megumi? Do you? I don't think she has a. We just have quarterlies this month, Roy.
Okay.
Okay.
Then go if you want to. I'll go. Go ahead and send me the.
Okay. Make you a presenter, Roy?
Make me a
okay.
presenter.
Okay.
If this goes haywire, then I'll have someone else, bring it up. But I'll try it as long as my Wi-Fi holds out. I'm just showing you the email when I posted everything and send everyone copies. As I say, I struggled with this company, and the price had dropped, and by delaying, the price dropped even further. And my upside down ratio changed from 3 to 1, 3.1 to 1 to a 5.3 to 1, strictly because of the price drop, no change in data. And I wanted, more than anything, to recommend a buy. We've lost money, but it's now at a price that's, one that you would say you'd back up the truck. But because of the world situation, which Haney alluded to, or someone did, about the dispute, the trade dispute with China, that's what affected the stock price, and that will continue to do it. And so this could be a falling knife situation, and I've bought too many of those. So I'm going to be recommending a hold. But here's the report, and as you can see, the numbers are horrible. And if I looked at this for the first time I probably would pass it by. The sales and pre-tax profit are down. Earnings are up, but barely. And but as you can see, the relative PE, the current, the average is 67%, and it seems to me that they say worry about anything under 70%. But here's the reason why it's been going down. It's the weakness in the smartphone demand. And I think part of that Apple brought on itself when it raised the price so dramatically on the new iPhones. I know I've waiting another couple of years. I probably will buy again in September when the new model comes out. But by that time, my phone will be quite old. And I think the demand will turn around in this market because people will be buying new phones, just not in the former time period, which was 1 to 2 years. But a lot of us have held back, and I think we'll do it come this fall, which will increase production. I don't know enough about Android. They also supply chips to Android. But so I don't know if they've run into the same price problem. But anyway, people, the so-called experts think that will turn around. But generally, the chip manufacturers had a bad quarter. Based on that, I'm saying hold. And even though things are down, Skyworks has made a big push into the Internet of Things. Plus, they expect there'll be a big player in the 5G arena. And so my report discusses some of that. I threw in some information from the 10Q. And like the last sentence, growth areas include aerospace, automobile, broadband, connected home, industrial, medical, military, wearable markets, as well as, so like my watch has some Skyworks chips, as well as cellular infrastructure, smartphones, and tablets. And here's a couple of slides from their webpage, and they're really stressing their work in the IoT, and they're putting their chips in a lot of cars. Cars are becoming technical monsters, not just mechanical. And then here's their 5G, and they'll be growing in 5G. So I expect this stock to rebound, but until this trade situation works out, I'm a little leery of buying more. And you can see like VW and BMW involved, but they're still, as last I heard, Trump was threatening tariffs on those cars, which could cut back on the demand for them, which would, of course, cut back on the demand for Skyworks chips. But they are trying, they used to be about 60% Apple, and now their total chip for phones is about 60%. And that's for most of the manufacturers, not just Apple. So they've been making a big push into Internet of Things, which is just growing tremendously and doing things that I never thought of. So I think it's worth holding. As I said in my email, I will be recommending a buy down the road. If we, because of the quarterly trend report looking so bad, if you want to sell, I'll just keep it on the horizon, and I'll be coming back with a recommendation to buy. So anyway, that's my report. I know we want to keep it short. Someone had a question.
Yeah. Yes. Well, here I heard on MSNBC or CNBC that a problem for Skyworks is that they had a very big contract with Huawei. They were providing a lot of material for the Huawei cell phones, and that has to be stopped.
What has to be stopped?
I mean, and so that is well, the Huawei phones won't be sold in the United States and in several other countries because of Trump and like an embargo going on to the Huawei phones, and so Skyworks sold these parts, but
okay, two things.
The phones aren't going to sell.
I know you and I disagree on politics, but there's a good reason to embargo that phone. Number two, they don't sell that buyer is only a small percentage of what of Skyworks' customers. So yes, it is damaged. It's part of that whole weakening of the smartphone purchases, but it's not the total thing. And you know, sometimes things like that happen. So you know, we'll see how it plays out. But and like I said, there's problems right now with the trade war with China, and until that's resolved, I don't know if the stock will continue to fall or if it'll rebound. You know, I don't have that crystal ball. But I think once the trade situation improves,
eventually
sales will improve.
I know. I try to understand that last three companies. All of them are in semiconductor. That's why I want to go sequentially, because I want to see if any correlation. So the first two semiconductor companies sounds like they are providing goods, products to companies like a Skyworks to make an end product. So really, the huge impact is Skyworks. So it seemed like the trade war thing did not really impact the other two companies because the stock price went up, even though earnings did not do good. But Skyworks, on the other hand, you know, the price got a huge hit. I try to figure out, you know, they are all in the same kind of industry. Why?
That's the Huawei connection.
What did you say, Bernard?
No, I think, to me, the Skyworks had a very direct Huawei connection, and why they got hurt the worst.
See, here's on April 16th, they hit a high.
Connection is mainly with.
And then
their fight connection is mainly with Huawei.
No.
Mainly.
No.
Okay, can we let Roy to make his comment? Okay, go ahead.
It hit the high on the 16th of April, and then all the stuff coming out of Washington and Beijing, and then it started going down, and then I think maybe right around here was the embargo. But that was only one company. They sell to a lot of different, or to the other smartphone companies as well. So, and that's a small, Huawei is a small company or a small buyer compared to all the other things. So yes, it took a hit, but Apple sales were down. And I don't know enough about the Android companies, but I imagine they're down too. And a lot of it has to do with the price of the new phones. I think a lot of people are like me. We're extending the period of time, but we will be buying them. So between new purchases coming up, plus hopefully a resolution in this trade dispute, things will go back on track. Plus, if the IoT keeps growing like it has the last few years. I think Skyworks will be doing well. It's just right now there's too many unknowns. They're known unknowns, as we were told at one point in time.
Yeah, I think that there was in 2017 they had significant or a large part of their sales was Huawei and Samsung and certainly Apple, and I know that they were trying to diversify and have less reliance on some of these customers. So I think if you go back and look at their annual reports, you might find that in 2017 they mention Huawei and Samsung and Apple, but then in 2018 I don't think they mentioned Huawei. So they probably the portion of sales that's attributed to Huawei once, or anybody else for that matter, once it gets below say 10 or 12%, they no longer have to mention it in their annual report. So that would lead me to believe that there's less reliance on Huawei now than there was maybe in the past, but certainly Apple might have picked up the slack, and so with Apple iPhones not selling, that's probably why. But I think this company's got some pretty strong cash flow, and they're well positioned, and it's probably just a temporary hiccup. I think eventually.
I remember being asked about Huawei either at the annual report or one of the other quarters last year, and I didn't think that they were selling any. And then one of you, it may have been you, Haney, did report back that they did have some sales. But it's probably the fact that, like you said, if it's under 10%, they don't have to report it. And that's probably what happened, is they were no longer in their annual reports. So, like I said, Bernard, I don't think that's a big part of the problem. It's the general weakness in smartphone sales. And they did report in the 10Q how
Okay,
the IoT
move along?
did cut some of that because they did have growth.
Hello?
Yeah, well, let me just finish this sentence. So I expect that growth in the IoT, especially with the cars, and resolution of the trade war, I think there'll be a dynamic change. So anyway, that's Skyworks.
So your final recommendation is a hold, right?
Only because I'm too weak-kneed at this point.
Okay, was it Tom's recommendation for his company's what, sell or hold? I forgot. Jane's sell. Do you guys remember Tom for his company?
I think Tom's was hold.
Okay, hold. Okay, Jane says sell. Okay, got it. Okay.
Hold on, ma'am.
Okay, next, Joanne. I think it's Mina's. Right? Oh, Mina. Sorry, Mina's cannot. He's not here. Joanne, you're muted.
So the next person we have up is, let's see, and Andrew's not here. Jane. Let's let Jane do her Facebook.
Okay.
So you guys need to get on board with Canadian holidays. So today is Victoria Day, and that's why probably Andrew and Mina are not here. But because I'm very dedicated, I am here.
So you're gonna say the youngsters?
But I should have been away by now. But
Hey, Haney, I want to thank you for celebrating my wife today.
It's actually the Queen, Roy.
Oh, trust me, it's the same.
I did not know that. Oh. Yeah, thank you for your dedication, Mina.
Okay. Yes.
Hmm.
Thank you, Haney. Yeah. So can you see my screen now?
Yes.
Can you? Is it
Yes.
big enough? Okay. So for Facebook, not much has been going on, and as prior quarters, the revenue and the earning per share growth are constantly declining because they are putting in more money into investments, safeguarding privacy, security on their platforms, and they are investing a lot in headcounts. So all these expenses are going up, so that drive earning per share growth rate to come down. And this is the revised SSG projection rate. As you can see, the earning per share hasn't been declined. Actually, it increased slightly to 15.2. Based on it's based on the preferred procedure that I use the 15% for revenue, and all these are based on the prior year's record, and that comes to 15.2 as earning per share growth rate. So with that, the liability has come out a bit, but it's very, very minimal as prior years, and which is really good. And so with that, we see the SSG come to the hold zone, and it hasn't been in the prior quarters. It has always been in the buy zone, but now the price has come up. As you remember, last quarter it was like in the range of $165. Now the price has come up to $185, and the users of all their tools or platforms have constantly increasing. So that is a good thing. And everything else is pretty much the same. Because of the costs are coming up, the revenue is not growing as much as they want to. But then the management has been anticipating that. So they have been telling the shareholders all along the quarters that they anticipate the revenue growth rate will deteriorate by a mid single digit in the next several quarters. And so based on the SSG, I recommend a hold, but I propose to divest at least a portion of our position because we purchased the stocks in 3 installments, and the average purchase price is $165. The first purchase in this 2017, that was before my time, and the last 2 purchases are in throughout 2018. So the average purchase price is $165. I recommend to divest at least a portion of it when the price hits 190, between 190 or even higher to 200 something. We should gradually divest and take the profit. That's my recommendation based on the SSG revised projection rate of 15% revenue growth and earning per share growth of 15%. Any question? For now, I would.
But this is this one is one of our largest holdings as well, after Disney.
Yeah.
On a dollar basis.
I mean, even though I said the target sale price of 190, but we are not too far. So if you want to divest now, but then I'm thinking since it has come down, a bit because of the trade war, so I think we should just hold it a bit longer to see how it come up and we can divest. Or you want to? I have no.
One thing we might want to look at in the future as an education topic is technical analysis, because that might help us make some of these buy-sell decisions as well. Just a thought.
Could we? What about now limit orders? What about, could we say like sell Facebook at 198 and put the order in today, but just wait until the price got to 198? Use a limit order. Can we do things like that? I don't know, Haney. You're the guy who does the money. I don't know.
We don't have like a brokerage account because we're not trading in real dollars. So, but what I could do is like in my own brokerage account, I could put an alert if it hits a certain price and then sell it. But using my iClub or anything else that we use, Morningstar, you can't really put limit orders in.
And then I forgot to mention about what I have this extra next to some numbers because the we have excluded the about 3 billion. It's a large amount of legal expense they accrue related to the free trade commission matter they are encountering. They actually estimate the loss could be between 3 to 5 billion, but they accrue for 3. So that's a non-recurring expense, so I take it out. So as you can see, that is why it's holding up quite well. Actually, the revenue is actually holding up quite well, and the earning per share is even slightly increasing, as you can see. Trading is even lower than the most recent quarter.
Did they mention?
Yes,
Jane, that legal situation, that's with the EU, isn't it? I don't think that has anything to do with the trade war. Am I wrong?
Trade commission. That's what they say. That's what
the
they
trade
have
commission
on the
in Europe, the EU.
Yeah, FTC.
They haven't had any problem with China, have they?
No.
No,
That's
but they
what
have
was
some
my
problem.
comment. Yeah, I think a trade war won't have impact to Facebook, right?
No, the trade war won't have impact, but I'm saying that there's a legal expense accrual related to free trade commission matter.
Oh, that, yes. Yes.
Yeah. Yeah.
The Canadian government is thinking of suing Facebook because of privacy violations or what have you. So I think they're going to face this in a few jurisdictions.
Okay.
Yeah.
So did they mention anything about the augmented reality for Facebook in this quarter?
No, I haven't. Yeah, okay. I look at all the earning call transcript. I didn't see any.
Okay, didn't mention that. Yeah. Okay. I'm just curious. Yeah. That could be big.
One part of their business that is growing really well is Instagram. And if my kids are any indication, I think that's something that's going to keep the stock going up in the future.
I do Instagram over Facebook. I don't. Facebook has too much political stuff. I don't care. So it bothers me. So I do Instagram.
Yeah, they are investing more into private platforms, and it will take a while for them to really do a wide expansion. But Instagram, yes, I saw that they're putting into new features. You can buy things you like on Instagram, like at the click. If you like something, you can just buy it right there. Is it true? I don't know. Use Instagram. I don't know. So
it is. There's a lot of. I know this because my daughter is getting married this summer, and a lot of the vendors and so on are on Instagram, and there's a lot of advertising going on.
I see. Congratulations.
Congratulations. What? She's in college now, so about get married, huh?
No, she's graduated. She's working.
Oh, wow.
Oh, wow.
Yeah,
nice.
That is no reason for you to not come down to bank. I wanted you here.
Yeah. So our is our agreement that we put in a limit order at 190 or even higher.
You can make
to divest.
You can make it this as a motion.
Okay, we can do the motion later. This is my presentation. Any question? Any other question?
No, that's good. Thank you. Oh, I think that your Facebook quarterly report is not in the folder. You mistakenly put it in the wrong folder, Jane. Your Facebook.
Oh, sorry.
Yeah,
okay, I'll fix that.
Yeah.
I'll fix that.
Okay.
Bye.
Yeah.
Okay. I know a lot of people doing Instagram, but I still do Facebook, and I notice there's a lot of places that still use Facebook, including I think VICS, our web club. We have a Facebook page. A lot
Yes,
of
we
people
do.
still use
No, we're
Facebook.
using it. So for small business also is good, but as for personal, I really, I just, yeah. But anyway,
Okay, so let's move
yeah.
along. Let's have Matt doing FLT and PETS.
Okay.
All right. Can you hear me?
Yes.
Yes.
All right. So this is FleetCor. That's SSG.
Mm.
So their price recently increased about 10%. They had a good earnings call where they revised their guidance upwards. So current price is about 272. Let's see here. That being said, their recent quarter was not that impressive. The current SSG I left unchanged with 8.5% sales and 12.5% earnings per share growth. And you can see the most recent quarter they didn't even achieve that. But they are guiding for approximately that for the end of the year. Current price to earnings is 30, a little over 30, and the average is 25.4. So it's pretty highly valued and compared to recent history. So with an upside downside ratio of 1.2 to 1 and only a compound return of 4.5%. So they've been having good. The main reason for the beat and the increase was the price of gas was a lot higher than what they had forecast originally. So they originally forecast for $2.60 per gallon, and the average price was $2.90 per gallon. And the higher the price of gas, the more money they make. So that was why they came in a little bit higher than they had thought initially. Other news, they repaid a little bit more debt, which is good because their debt was starting to creep up a little bit, which you'll see on the SSG. They're at about 60% almost debt to capital right now. So no new judgments on the SSG. I kept the high PE at 26, even though the current PE is 30. And then that's just a little bit above the average high PE of 25. But I said hold for now and look to sell over 320 or under 220. I can pull the SSG here. See 8.5 with 12.5% earnings per share forecast. Then right here is the debt along the bottom. You can see it's been increasing, so not substantially, but it's a little bit higher than I would generally like.
Why does this company
Something to
have a
watch
lot of
out for.
debt? I forgot. Matt?
Why?
Yeah. Why do they have a lot of debt? Like a 50%?
I'm not sure. I mean, just to run their operations, I guess. I don't know.
It's a credit card company. They do gas cards and things like that for for companies, and so they probably have to hold a certain amount of money while they people are buying on credit, and then they get reimbursed. So
Yeah, that's probably so. Yeah, so you can see there it's in the hold range at 270 up to about 350 is what the SSG says. But we made a lot of money. I know that I forget exactly what price we bought it at, but it's increased pretty substantially. Annie, correct me if I'm wrong. But anyway, I think we could hold it, but if it goes up a little bit more, it's probably going to be pretty close to sale range, even though I don't normally say that.
I just
Any
noticed
questions?
I just noticed that your high PE. Oh, you took a 26 as the most recent PE. Most recent, the last 2018, 26.
Yeah, I just increased it a little bit over the average, which was 25. So, and even 26 felt a little low, given that the current PE is 30.
yeah, our return on this, Matt, is about 55%.
Yeah, so it's done really well.
Okay.
But I think it's a good hold for now.
Okay.
Somebody vehemently disagrees.
Okay.
Okay. And can I do pets real quick?
Yes.
If there's no questions.
No.
Okay. So PetMed Express, I didn't realize this. Sorry, this actually should have been an annual report because they have a weird fiscal calendar. But I didn't realize that I was supposed to do this till it was too late, and I didn't have enough time. But anyhow, here's the quarterly since we just presented it. I figured this would be sufficient for the time being. So current price $19.24. We bought it right around there, I'm sure. I did revise so the sales and earnings per share growth. They had a really, really bad quarter. You can see here I revised the SSG to 0 and -3 on earnings per share, -3.6. Most recent quarter, the earnings per share was -36, and the sales were -4. And they didn't seem to act like this was a aberration or anything like that. So I know with Chewy and Amazon and those kinds of things, those companies starting to get into kind of PetMed Express's business, maybe it's going to affect them a little bit more than we thought. So yeah, that being said, the current PE is 10.5, which is really low. Average PE 16.8, so relative value 63%. But with the lower sales and earnings per share growth, upside downside ratio is still only 0.8 to 1, given the low or the no earnings growth. So this quote, I think, pretty much sums up this is from the CEO in the earnings call. The online pet medication market needed to be more competitive during the quarter, which had a negative effect on our sales and gross margins. Our average order value declined, was $87, sorry, from fiscal 1918. And then he goes on to say how much the net cash was provided. So they're still earning cash. I mean, it's just their earnings are starting to decrease, which is not great. The dividend is at 27 cents per share. I just felt like pointing this out. And the free cash flow is at 37 cents a share. So they're covering the dividend right now. It's about 60% or so, I believe, is the coverage ratio. But if their earnings continue to decline, we might have to watch out for that. They might cut their dividend or something like that. But as of right now, they're safe for the time being on that front. So yes, I did propose the new SSG assumptions, and then, but I still recommend a hold. Just based on the price, it is still a hold on the SSG. Let me pull it up. You can see here 0. That looks good, but the negative earnings is definitely not a good thing. Yeah, so we're still in the hold range at 1930, but kind of on the high side. So, any questions?
Why aren't you recommending a sell? Do you have confidence in this company going forward?
I guess I don't know, to be fair. So I think there could be value in buying it still, just because they do have a ton of cash. And let's see how this advertising that they're doing goes. If the advertising fails miserably, and they continue to see declines, then yeah, we should just probably cut losses and sell. But there are prices that we might want to watch out for where, it might be worth something just based on a little bit of cash that it is still generating.
Yeah, we bought them last month, and
yeah,
and then subsequently their competitor Chewy came in to the market with some pretty aggressive pricing, and then they had to lower their price, and so there's a bit of a price war going on, and I think that's probably impacted their results. So, I mean, I don't know how they're going to do going forward if these competitors are, because I understand Chewy is much larger, and so they might have a bit more staying power and more cash to win a price war. And then Amazon is getting into the business as well, so they might have a lot of challenges going forward.
Definitely. And Chewy just, I think, went public as well.
Okay. Oh, Chewy is the company name?
Mm-hmm.
Oh.
Their ticker CHWY.
Okay. See, that's the lesson learned for us, was that we do not look the competitors. We do not look in depth because I remember last meeting we looked as in the sector, right? We did not look at this company against the PetMed, against the Chewy, against Chewy just went IPO.
Yeah,
Oh, okay. So we would not even
like
know. We
just a
studied.
week ago or two.
Okay. So then we would not even know. Yeah. Never mind then.
Yeah, but it could be a good challenge, I guess, going forward. Now that Chewy, who's a direct competitor, is public, we might want to do it. Be an
No, they don't
interesting
have any
study.
history. We only study the company have 5 years sales.
Don't they have to report some history as part of the IPO process?
Yeah. What is it? The S1 or something like that? S1 or S15?
Maybe.
Doug and a couple of people talked about it at Bink. So I'll go over my notes and send it out to everyone. But yeah, there's at least a 3-year history that they have to file with the SEC. And so just because it's new doesn't mean it's no information. The only thing that we wouldn't have is earnings per share.
Yeah, and online pet, Chewy is much bigger than Amazon even. So they're probably like the main company in that area.
Bigger than who?
Amazon in that demographic, if you will, like the pet demographic.
Oh, okay, in that area. Okay, business in the animal like a
they
pet,
do more
pet,
sales in pet
medication.
things. Yeah.
Yeah. Okay, I gotcha. So does that mean Chewy also bigger than the sales wise? Is that company also bigger than PetMed? PetMed?
I don't know. I haven't looked at their sales, to be honest. But
PetMed is
I would guess
small
so.
company.
Small company? Oh.
PetMed is small.
Yeah.
That's why we found it, because we limited our search to small companies last month. What's the ticker for? Oh, CHYW. Never mind.
It's not coming up, Roy. I was looking for it on Yahoo Finance, and it says that it's a private company, so it doesn't look like they've transferred the results yet if they've IPO'd.
Okay. If you take a on what Haney has up there, I mean, I'm sorry, what
Matt.
what's up here is.
Oh yeah,
Matt.
sorry, I forgot I was
No, go back to it. Under the quick take. No, the previous one. Yeah, under quick take, it says raised, whatever, according to an S1 registration statement, and I think that's what was mentioned at Bink. Look at the S1 registration statement. So you'll have to go to Edgar, but and maybe you can go it through the company's website to the SEC filings. But look at the S1, and that'll give you information that you can then put into the SSG.
Okay, there you go.
Okay, so we have 6 more stocks left in like 20 minutes.
Okay, well, I'm all done.
A couple other things to do, so are you done? So can we move on?
Yeah.
Okay. All right, so next I will present PSA, public storage. Okay. Can you see my screen?
Yes, I think so. Yes.
Yes. Okay. Okay, so I have public.
LSD.
Sorry. Did you say something?
You got a while. You see your screen, either that or I suddenly went on LSD.
What happened?
I was just commenting on your screen.
Come up.
Or cannabis, Roy.
Okay. All right. So public storage really hasn't performed, it's not like a growth stock. It's more of a
Income
well,
stock.
yeah. So it's a I guess it has a dividend. It has to disperse dividends. I don't know, for their profit. So, so for the last, I didn't change any of the growth projections. I kept those the same. The most recent quarter is for sales, pre-tax profit, and earnings have increased. We have the share price has increased slightly, so we purchased it around $216, and it's about $230 right now. Let's see. So the average payout I have is 75.5%. Okay, so to note, their same store revenue growth is lower than historical average, and that's due to competition in the marketplace. New companies are coming up, and there are markets that are being hit by this are, and also as well as local economic conditions. So areas like Atlanta, Austin, Charlotte, Chicago, Dallas, Denver, Houston, New York, and Portland, they experienced an increase in 5 newly constructed self-storage facilities, which are their competition. So their sales revenue was a little lower, and their occupancy declined 50 basis points last year. And it's still, their target is 90%, so they're still above the 90% at 92.6. The way they counter the revenue growth is by increasing their rents. So they increased their rents by 2%, and they are, so from Value Line said they are ranked to outpace the market in the coming 6 to 12 months, and it's recommended is that because of the defensive nature of REITs in general, and this company has got like an A+ rating in Value Line. So if or when the S&P or when there's a recession or a major downturn in the U.S. market, then this is likely to outperform the S&P 500. My recommendation is to hold as a defensive stock. I don't know when the downturn is coming, but I think one of the reasons why we are holding on to this stock is to learn more about REITs, because they do use FFO instead of EPS. Okay, so are there any questions?
No, just a comment. Okay. Based on Hanny's report, compared to O, realty income, as now we know, actually performs better than public storage.
I know. We should have held on to O and sold this.
If we know better.
I don't know why did we sell O?
I don't know. I don't remember. I remember I followed it. Maybe I don't remember. I have to look at notes. I think we document why we sell. I have to take a look.
Okay, so I'm going to move on to Air Lease, which Hanny had quite a few questions about, and Bernard helped in answering some of those questions. So I didn't change any of the projections. Most recent quarter has increased over the trailing 4 quarters except for the earnings. And let's see.
Can you make it a little bit bigger?
Sorry?
Can you make your screen a little bit bigger? Okay.
Is that better?
Yes.
So relative PE is below 85%, indicates there may be hidden problems that other investors know about. And I think Hanny was asking questions about why. Let's see. Let me see what his questions were.
Well, there were a number of things. One, the high debt and the impact that if interest rate go up.
Oh, yeah.
The economics globally with if there's a trade war or if there's a downturn in China or other areas, some of their customers may start to go bankrupt or default on their leases and so on.
They have a unique strategy that not all leasing companies implement, and that is that they have require security deposits on all their leases, so that if a airline does default on the purchase, those security deposits cover those payments. So in the meantime, then they repossess that plane and release it to some other company. So that's how they cover that. Most recently, it was WOW Airlines defaulted, and they were able to cover those payments with their security deposits. So that's how they protect themselves for downturns or airlines defaulting. What was another question you had?
He had it on debt, and I think if you compare it with other leasing companies, the debt isn't that far out.
Yeah, I
all
think
leasing companies have to buy the equipment. So because some of the small airlines can't afford to buy a plane, but they can use their revenue to make the lease payments. So that's what Air Lease does. It buys the plane and then leases it out. And it also is able, if there is a airline defaulted, they get the plane back, and seems to be ready buyers for the used plane. So they seem to be pretty well protected in that area.
They also had a number of, they were going to take a possession of a number of Boeing 737s, or the one that crashed.
Yeah,
I guess.
the MAXs. But that's over a 5-year period, and that's still only a small percentage of the airplanes that they own and actually have on order. In fact, I remember reading a headline two weeks ago that they took, I think it was 6 planes from that European company. So it took delivery on. So they don't just buy from Boeing. They buy various
from
sizes and Airbus, and they lease them out to the Europe and Asian airlines that need planes but can't afford to buy them themselves.
Okay.
Joanne, but anyway, because I follow it pretty closely.
Okay, so let's see. Based on the SSG, my recommendation is a buy, although Hanny did have questions about the pre-tax profit. Let's see. What was that? Year over year, pre-tax profit on sales decreased by about 60%. What's the cause, and what is the risk of this trend continuing? And let's see, pre-tax profit. I think I looked it up, and for year to date, it's increased. It's performed better than the S&P. So I'm not sure how far back we look at historical. Trend. Do we look at that as a trend? Roy, do you have any insight on that?
I can't remember. I was looking at the SSG and it looked like it had dropped, but maybe I was making I was looking at the wrong thing.
Yeah, you look at year over year.
Yeah.
Well, both the quarterly, and then you look at the trailing 6 months or trailing 12 months, and which is the 4 quarters. So I haven't looked at that lately, so I can't. I was tied up with other things, so I can't really respond to whether it's up or down or what it actually looks like.
Well, year over year, it went up. The pre-tax profit went up. Maybe I was looking at the quarterlies.
And was it year
But,
over year quarterly, or was it quarter to quarter? Because it
oh,
was
maybe,
this quarter versus last quarter.
yeah,
It's hard to make a comparison because of seasonal needs.
right.
Okay. We have 10 minutes and we have 1, 2, 3, 4 more stocks to go. So, John, do you want to do Ozark?
Yes. Let me make him a presenter.
Yes, okay. I'll try to do my best to go quickly. I'm pretty new, so this shouldn't take too long anyway. There's a lot of questions. So here's the PERT report. I just kept sales growth projections and EPS growth projections right here from what Haney did last time, the most recent SSG, because we were doing a new bank stock. So he did one in March. So I just kept that the same from there. I can go into this if necessary, the SSG if necessary. This is the data from the quarterly data. It was a little bit late in coming in, but it finally did come in. So most recent quarter, all negative for sales, pre-tax profit, and EPS growth, but just slightly. Trailing 4 quarters, you can see there what the results are. So current price, I think it went up a couple cents. So right now it's about $32 even or so. Current PE, probably around 10. Average PE from the SSG is 17.1. So 58%. I didn't realize that was a bad thing, but I guess it kind of is, according to Roy earlier. So upside down ratio 2.8 to 1. This is where the judgment comes in, I guess, for this quarter. Or maybe I think I chose these with Jay. I talked to her about these. Average high PE of 14. Even though the average here is 21.2. We chose 14 to be conservative. It's trending downward, obviously. So 14 to be conservative.
That was your last SSG's.
Okay. That
Yeah,
was also the last.
we're just saying did not change any judgments.
Okay.
Just everything remained the same. That gave us a hold, basically. Okay,
great. So 6.5 for average low PE. That was the last real low PE for average, and so kept it in the hole, the 2.8 to 1 upside downside ratio. And I got a lot of notes. I just tried to as much as I could really from the 10Q, and so you can read all that if you want to. These are the ones I highlighted. I thought these were important. Were the more important were the ones I highlighted. I'm not going to read them right now because you can read too, and if you have any questions, you can ask me about those if I can answer. But and then I just quoted from VICS regarding their overall impression of Bank Ozark after the most recent 10Q. Simply Wall Street, I don't know how reputable that blog is, but they have an intrinsic value calculation for $60.62, and they recommend to buy. Dividend yield's a strong dividend stock, but that could be because dividend yield has increased because the price has decreased recently. That's always a danger with dividend yields. It's just because the price decreased. So recommend to hold. I wanted to point this out before I stop because as you might know, I know this club probably knows that you can't find the Bank Ozark anymore on the EDGAR and the I don't know what that stands for, but the
SEC
website, the EDGAR tool. You can't find it there anymore, so you have to go to. I would just bookmark this if you want to check this one out. There are the reports in the future. Bookmark this URL right here, and then enter the FDIC certificate number 1110. And you can get the actual official Bank OZK filings with the FDIC. They have them on their website, but I just want to point this out in case you want to find the bona fide official.
SEC, yeah. We had a trouble to find their annual report on under FDIC. So apparently John was able to get the certificate number. I think that probably is the key because their website just kind of like some other website have trouble to find it, to search what we're looking for. So this is really helpful.
Yeah, so if you want to look at their actual filings, you can use that in the future. So that's all I really have. That's, in the interest of time.
At the bank, I took a class about the small bank. Actually, they use Bank Ozark is one of the examples. I also discussed with the instructor who worked at 3 banks. I was talking about this 35% of a loss in Bank of Ozark, and he kind of agreed with me that it was just a 2 bad quarters. And we focus on the management, which is ROAA, the return on average assets, and efficiency, not efficiency, efficient ratio. Efficiency ratio, did you? Yeah. So ROAA, they remain about 2%, compared to year ago. So that's very strong. Very rare companies can maintain that percentage. So does efficiency ratio. They are at the what, 38.5?
For years. For years.
What?
For years. They've maintained that ratio for years.
Right, for years.
Several years now.
Yeah. So that's very rare for a company can maintain about 2% in under ROAA. That shows as a management. Efficiency ratio, it's for Bank Ozark is about 38%. That is also very strong. According to the instructor, if you can maintain 45% or under, is considered outstanding. So this number shows their operations, how efficient their operation is. So I believe that Bank of Ozark is still considered as a quality company. So I would just give some time to this company. Hopefully they can bounce back. The price can bounce back. If you're interested, I can show you Pacific West just to do a side-by-side comparison about
go ahead
bank.
and do that.
Okay. Let me make myself a presenter. So we present this Pac West Bank is just to challenge Bank Ozark, because at some moment I had a doubt myself as well. I did not make any changes, judgments, projections under SSG. For the sales, for the bank, the sales is really, as you can see, my note is that for bank is the net interest income plus non-interest income. So I highlighted it just to see why it went down, what happened. The main reason was that in this quarter, they are 2 days less in the first quarter compared to the last quarter. So that was the main reason why, it was down. Pre-tax profit year over year is down about 5%, but 12 TTM, the trailing 12 quarter is about 6%. So does earnings. The earnings. So I like Bank Ozark. They compare earnings compared year ago, which you supposedly compare year over year ago, but under this company they compare with the last quarter. So if I'm sorry, I did not check what's year over ago 2018, but just look at the last quarter, they were just about the same, only like 1 penny short. So for this company's return of average assets is about 1.77, compare last quarter is 1.84. Efficiency ratio is 42%. Calculated is non-interest expense divided by revenue. That's what I learned at bank, that the lower the ratio, the more efficient operation is. Those are the PEs all getting from, without changing any judgments, that's how the upside down ratio is. Compound annual return using average PE, it gave us 15%. So what, any news about this company in this quarter is that they are going to open a brand new full service branch office in Denver, Colorado. Also, they had a stock repurchase program. The biggest news I was saying is that they are renamed to subsidiary company. Banks. One is called. Somebody's making noise in the background. One company is called the Capital Source and Square One Bank. So now they are going to use all under one umbrella called the Pacific Western Bank. So this is just a big change from their marketing perspective. Even though SSG shows a buy, I would just recommend a hold because we already have two sectors, same sector, same size of a bank stocks that in the same sector. So I don't recommend to buy more. So that's it. Questions, comments? No.
Okay, so we're at
What about selling? If we already got a good bank, why do we have another one? Well.
Well, this is something that Bernard, I understand we invest hypothetically, right? It didn't really harm us if we sell. But if I treat this as we invest in real money, I wouldn't sell something that I just purchased. So, what's the earning? What's the percentage we get right now for this company? We just bought it, right? We just bought last month. Is Bank Ozark, PacWest. So actually, right now we're down about 6% because we just bought it. I would not take a loss or anything. We were challenging Bank of Ozark. Actually, initially I was thinking to sell Bank of Ozark, but then I actually even did a checklist to see if Bank of Ozark is meet the criteria to be sold. It's not. I will just kind of continue hold as just to kind of validate if Bank Ozark can meet our expectation.
we have two more stock reports, Comcast and AQN. Can we go up? Bernard, would you like to present Comcast?
Bernard?
Yeah, but here's the thing. Yes, I
okay.
I want to present it. I hope maybe somebody could bring it up. I uploaded it, but I can't find it on my Google Docs now.
Okay.
Maybe somebody else should drive.
Okay. I can bring up Comcast. You can go ahead and talk.
I can't find it on my computer.
That's okay. I can bring it up for you. Comcast here. Oh, actually, something that I want to. Oh, there are two copies. What happened was I noticed Bernard overridden the template. I moved it over for him. So anyway, here you go, Bernard. Go ahead.
So their growth is continuing, and shortly after I did this quarterly, see, I actually own the stock. I got an annual report in the mail, and the statement in the mail, and this is a big company. The 10K is 160 pages, which I've been reading, and the proxies, I think like 70 pages, 72, and just okay, sales projections. Just take one aspect of this company, the television. They have USA Network, have E Channel, they have Sci-Fi Channel, they have MSNBC, they have CNBC, they have Bravo, they have NBC Sports Network, they have Oxygen, they have the Golf Channel, they have Kids, they have the Olympic Channel, CNBC World, plus in the last year, they've done two major broadcasts. They did the Super Bowl and the Olympics in 2018. So just on television, their revenues, just from the Super Bowl, $1.6 billion in Super Bowl ads. And I would think coming up in the election season, they will sell a lot of advertising to deal with the elections. So anyhow, it's kind of an interesting company. And they have theme parks, and it's and the fastest growing area is Sky. Their fastest growing area is in England and in Europe. So anyhow, it's kind of, I'm just learning more about it. I had to do a quarterly report, but after I did a quarterly report, an annual report come, and it's your company than even I knew. But the current PE is 16.5, and the average PE is 14.9. So relative PE is 110%. Its upside down ratio is 5.3 to 1. Compound annual return 22%. And using the average PE, it's 18%. So the long-term return is expected to be pretty good. And as I say, NBC, CNBC, MSNBC, they're CNN, and they're quite close to Fox. In terms, they get a lot of views. And from Yahoo Finance, here's one quote. There's a lot of quotes I could do. Motley Fool says that the Comcast first quarter results are nearly everything investors could have hoped for. Revenues and earnings per share were 17.9% and 16.7% higher, respectively, thanks to large part to last year's takeover of the British broadcasting company Sky. Through the entitlement is in flux, Comcast is doing just fine. So the entertainment world is in flux. Comcast is doing just fine. And recommendation is I would say buy. And there's a stock selection guide here I did.
I don't have your stock selection
Can we
guide.
see that quickly?
I don't have that imported.
Can we see the SSG?
Yes. I don't have a CM Comcast. June. I only have the. I need to refresh data. Just a second. Because what was the forecast again? 7 or 22? That's not what I have. 7.
Yes, I probably use the same figures.
No, I know, but I don't have your latest.
And what I did when I
22.
When I did the stock selection, I just used the last 5 years, and it also that's where I got these the numbers that it's a good long-term provider, over 15%.
But what I noticed, the margin went down 2%. Their margin went down 2% from 18 to 16. Return equity down significantly.
Those I'm guessing are because of the Sky acquisition.
Okay. Yeah, because
so their debt would have gone up
yes.
As a result, and integrating. But the thing about Sky is that they have the rights to the Premier League soccer in Europe, which is not big in North America, but it's huge in Europe.
Oh,
okay. Whenever I go to London, they the only way you can get soccer on TV there is to have Sky.
Oh, I see.
So it's a big. Everyone has Sky.
So,
hey, Bernard, can you tell me what's a high P?
How much does Sky? Haney, I'm asking one thing. When Sky, does Sky extend much into Europe, or is it mainly still London, England?
No, it's all of Europe.
You know, Haney?
It's all of Europe.
All of Europe. Okay, thanks.
Yeah.
Bernard, can you give me your high PE, because this SSG is old? What's your high PE?
Oh, let me see if I got it. I got it here. Oh yeah, here it is. I have it, Jay.
Yeah. What is it?
The high PE. Okay. Oh, here we go. Here's the second page. The average. Okay, wait a minute. It takes me a minute to get my eyes
That's okay.
focused.
Let me see
The
if you
average
have it.
PE. Okay.
I don't have it. You did not read
Oh,
import.
geez.
I did not provide.
I have it here. Damn it. Okay, the average high PE is 17,
17?
and that's what I put 17.
Okay, sorry. Shoot, sorry.
Times the earnings per share of 654.
17.
11.
So you took
Yes.
the last 2018.
Average high.
You took 2018's high PE then, 17. I think that is okay. What's the low price?
The average PE, the low, okay, and the low price is $30.04.
What's your projected low price?
40
Did you
cents.
choose? Okay, what's your low PE then?
Okay, here's the average PE was 12 times the earnings per share of
12. Okay, 12. Okay.
They're undervalued at the moment.
17.
Yeah, their average PE
No, it
over
cannot
the
be
last.
12. Yeah. It cannot be 12. Because if it's 12, it will be much higher than the current low PE. That doesn't make sense. It will give you invalid.
Well, that's the average low PE that I got. Well, by I don't know, Jay. That's what I did.
They're undervalued regardless. The current PE is about 15 or 16, 15.5 or something. And their historical PE over, like, say, the last 9 years is about 20.
Okay.
So they're based on just PE alone, they're undervalued, and their earnings, projected earnings are 19% in 2019, 12% 2020, and 11% in 21. So double-digit earnings.
Okay, looking at the
if you go by the low, I would use 30 if you wanted to go to the low
price.
52-week low.
Yeah, it is 30 right now, 30.4. That's what I did. Raise the market low. Are you guys okay with that? Yeah.
I'm optimistic with the television sales of political advertising and their expansion into England and Europe and.
What about using current PE? I feel like the high price is a little bit too high.
Yeah.
Okay. So the return, wow, seriously, 20%. I want to take a look at the quarterly data one more time. So their earnings.
When did it buy Sky?
When did they buy Sky?
Oh, just very recently. In fact, this is the first year I think they've really owned it.
Yeah, I mean, was it 2 months ago or 12 months ago?
That's why their debt went up so high.
But the earnings was.
Nothing wrong about it.
Do you know, Henny? When did they buy Sky? Anybody knows?
I think the deal closed.
We lost you, Haney.
We lost Henny? Okay. Oh, shoot. My website.
Damn.
Something wrong with that company's site, too.
Yeah. Well, I was just wondering if some of that sales and earnings wasn't from Sky, but I don't know.
Yeah.
When it was spot.
So wait, I'm sorry, what's the relation between X Infinity and Comcast? Where's
Well,
Marketing.
Xfinity is one of the brands that Comcast owns.
Okay, there you go. I just want to take a look.
Comcast
Where did
uses
they bought?
Xfinity.
Where's
Comcast Xfinity is cable TV plus internet connection plus telephone all that Comcast has.
I don't see the investor relations.
Can you guys hear me now?
What?
Or?
Yes, we can hear you now. I don't see
Okay.
the investor
good.
relations. Okay, acquisition, Deep Blue.
I have a question. Can I just do my AQN because it's getting to be 11, almost 11:30.
Yes, sorry. Yes, I can.
If you don't mind, and I'll take just 30 seconds. Basically, well, let me get it up here. Okay. So they have pretty good results. The only downside was the most recent quarter year-over-year sales was down about 4%, and that had to do with the Tax Act. So they had accelerated earnings in 2018 due to U.S. tax reform, and but if you take that aside, their actual adjusted earnings were about 3%. So overall, they did very well. Profit is going up, EPS is going up significantly. They have a number of projects that they completed, and those are bringing in extra revenue. They want to increase their dividend. They increased it already by 10%. And a lot of the new projects, sorry, I should say this is a utility. They own a number of renewable energy sources, hydropower, wind, solar, a couple of gas plants, but mostly they're trying to go towards renewables, and they're trying to grow in regulated markets that provide consistent visibility on earnings and long-term contracts. So my recommendation is, I haven't changed any of the numbers, recommendation is to buy. And we're getting about a 5% dividend. So, even without the growth, there's a pretty healthy return.
Okay.
And that's a high growth rate, 10% expected growth rate. It's pretty high.
Yeah, they're doing a lot of acquisitions. They have a lot of money available for acquisitions, and that's how they want to grow their dividend, is through either new projects that they build or acquire. So I think they bought a water utility in California recently, last year. And again, that's a regulated environment, so they get pretty consistent revenue stream. That's got a long runway, so they don't have a lot of ups and downs in their revenue.
Okay. Sorry, Henny, before we were just talking about Comcast. One thing, Comcast bought Sky. I agree with you by Algonquin, but back to the Comcast that Bernard recommended to buy. They bought Sky back 2018, September 2018. However, the most recent news is that they have agreement with Hulu, Comcast with a Walt Disney company. They have agreement on Hulu future governance and ownership. That's huge. That came out in May 14.
Yes. Hulu's kind of on the back burner as far as I understand for Comcast. I think that's between Disney and it's kind of up in the air about what's going to happen. It was on the news the other day about what they're going to do with Hulu, but I don't think it's going to go immediately to Comcast.
Can I just make one comment and I'm done? I want to make this as a education topic for the so this blue line is your projection, Bernard. But look at the sales and earnings and sales earnings, they are below your projection. So that actually is a red flag, unless your projection is very, very optimistic. Which I
Jay,
want to talk about this the next
leave
education topic.
because it's late.
Yeah.
Okay,
Can we-
next time, I could be educated for sure,
Can
but
we?
I did the best I could.
Yeah. Can we do parking lot this because
Yes.
we've got way over time now.
Right.
And do we want to get to any motions? And then should we postpone the election of the officers till next month?
Yes.
Okay, so are there any motions? No?
Penny made a motion to buy something early. Buy a Guangquan? Penny?
I think somebody made a motion to.
Oh, to sell
Oh,
too. Yeah.
I want to make a motion
By
to
AOK.
sell.
Okay, Jane, what was your motion?
Yeah, motion to sell ENTG.
Okay. Anybody want to second that?
I second.
Okay. So are we using the ballots?
Okay,
I'm
try to.
I thought we were going to be using the My iClub, but I guess we're not ready for that.
Oh, sorry, I need to sign in. I have to consult with Haney later.
Okay, so we're just going to do the Google ballots.
okay.
So it's coming right now.
Okay. Are we
Okay.
making money right now or losing money? I mixed that company.
Oh, we are making money. It's annualized return.
Taking a profit. Okay, taking
Over-
a profit. Got it.
Yeah,
Okay.
it's taking a profit.
Okay.
Over 60-something%.
Okay.
60-something.
Okay.
Yeah.
Got it. Okay.
Okay, so everybody check your email. You should have a ballot in your email.
Yeah, got it.
Okay.
Okay. Roy voted. I voted. Yep.
Is it always the same ballot?
Yes.
oh,
Same
here.
ballot.
So just to be clear, yes is sell, no is keep.
don't
The
know.
motion is to sell. Yes.
Okay.
Yeah. So if you agree with that motion, you say yes. If no, or abstain. Yeah.
Okay, I'm trying.
We have actually the majority have passed. The motions
Okay.
to sell.
I guess because I sent it, I don't get the ballot.
Oh, you did not get yourself a ballot?
I thought I did, but it's not showing up in my email.
Okay.
Okay, I say sell.
Okay. All right. Motion passed. Next.
Who's following that?
Yeah, I put in.
That Jane
Who's-
follows that. Jane follows that company. So Jane follows two. So now Jane Hana just have one.
Yeah. I
Who's
see.
following Fizz? Who is following Fizz?
Andrew. Oh wait, sorry, Mina.
Mina's following Fizz? Okay, all right. All right, any other motions?
By AON.
AQN.
Oh, shit.
AQN.
Alcoin Power.
Yeah.
Anybody second?
Which is AON. AQN, right, AQN.
Yeah. Any 1 second.
By AQN.
Okay,
Henny, you're not second that?
he's probably gone to sleep.
Yes, I am half asleep.
Oh,
Maybe it's not.
go ahead.
Okay.
All right. Okay. Let me
Hey,
see.
so Hanny, did you start the iClub voting thing?
I did. I just sent it out, but just for fun.
Okay. So.
Does somebody need to clear the other vote because when I go to vote, I just say I've already voted.
I cleared it already. Can you try again?
Okay.
Okay.
Oh, God, I keep the wrong one.
All right. Yeah, it's clear now.
Okay.
Jesus.
That's okay, Bernard.
I can get the, I vote yes. I can't, everything keeps bumping around me and I can't get it.
That's okay.
Yeah.
No worries.
I say yes.
Okay.
Bernard and I say yes.
Okay. So if Bernard you say yes, then
Okay, good.
majority vote passed. Okay, vote passed. Okay, well, assume everything's at 1,000 if we would buy.
Yeah.
Okay. Okay. Any other motions? Do we have any other motions? What was the other company?
Yeah, I move and buy
Haney, did you have
Comcast.
another one?
Yeah, I did both AQN and ENTG.
Sell ENTG by AQN.
Okay. Anything else was buy or sell? I can't remember. I thought there's something else was sell.
I'll second. I'll second the motion for Comcast. Bernard, you did make a motion, didn't you?
Oh, good.
No.
Yeah, I make a motion to buy Comcast.
No,
Okay.
Roy already made a motion.
Well, he seconded.
No, I seconded
Oh, you
his
second.
motion.
Oh, okay, gotcha. Okay.
Okay, so vote.
Okay. Vote.
Okay.
Yeah, I hope next month we can use Comcast because I hate having to retype my email address every time.
Oh, I mean,
Should be a
iClub.
simpler way to do this.
I don't have to put
yeah,
an email. Email is option. We don't have to. Because the reason why we want an email is that we
No,
want
well, mine says as a red star, which says required.
Yes, I've said that we can make this as option. It does not have to ask for email.
Well,
Just to
but
check
then you
if we
guys
voted.
need to know. But I think iClubs is a little cleaner.
We just need to
Anyway.
get Tina and Jane on it, Roy. As long as we
Jane
get
and
everything.
Okay,
Sorry
6
about
people
that.
voted. It's okay. 6 people voted. Who else? Joanne, need your vote.
Yes.
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 Okay, majority. It passed. Okay.
All right.
So,
Okay.
should
Well,
we just?
I'm almost as bad as Haney. I'm signing off.
Okay.
I got an early flight in the morning.
Okay.
Okay.
So good night, everyone. Good
night.
meeting.
Yeah.
Okay.
So
Good night.
we're going to stop recording, but I want to hear the comments from our guests. Okay,
Okay.
Joanne?